Welcome! Today, we're breaking down two important government programs, SSDI and SSI. If you've ever wondered what these acronyms mean or how they differ, you're in the right place. Many people confuse Social Security Disability Insurance, SSDI, and Supplemental Security Income, SSI, but they serve different purposes and have unique eligibility rules. In this video, we'll walk you through the basics, explain who qualifies for each, and highlight the key differences. By the end, you'll have a clear understanding of which program might apply to you or your loved ones. Let's get started with the essentials. First, let's talk about SSDI, which stands for Social Security Disability Insurance. SSDI is a federal insurance program that provides monthly payments to people who have worked and paid Social Security taxes but are now unable to work due to a disability. The amount you receive depends on your previous earnings and how much you've contributed to Social Security over the years. SSDI is not based on your current income or resources, but rather your work history and the severity of your disability. If you've worked enough and paid into the system, SSDI could be available to you. Now, let's look at SSI, or Supplemental Security Income. SSI is a needs-based program designed to help people with limited income and resources who are aged, blind, or disabled. Unlike SSDI, you don't need a work history to qualify for SSI. Instead, eligibility is determined by your current financial situation. SSI provides monthly payments to help cover basic needs like food, clothing, and shelter. It's funded by general tax revenues, not Social Security taxes, and is meant to support those who have little or no income. To qualify for SSDI, you must have a medical condition that meets Social Security's strict definition of disability. But that's not all. You also need a certain number of work credits, which are earned by working and paying Social Security taxes. Generally, the older you are, the more credits you need. For most adults, you need at least 20 credits earned in the last 10 years. Children or young adults may need fewer credits. If you haven't worked enough, SSDI won't be an option, even if you have a qualifying disability. SSI eligibility is based on your current financial situation, not your work history. To qualify, you must have limited income and resources. The Social Security Administration sets strict limits on how much you can own and still receive SSI. For example, your resources like cash, bank accounts, and property must be below a certain threshold. Additionally, you must be aged 65 or older, blind, or disabled. Even if you've never worked, you may still qualify for SSI if you meet these requirements. SSDI is funded through payroll taxes collected under the Federal Insurance Contributions Act, or FICA. When you work and see Social Security taxes taken out of your paycheck, that money goes into the Social Security Trust Fund. This fund is used to pay benefits to people who become disabled and have paid enough into the system. In other words, SSDI is like an insurance policy you pay into while you work, and you can claim benefits if you become disabled and meet the requirements. SSI, on the other hand, is funded by general tax revenues, not Social Security taxes. This means the money comes from the federal government's general funds, not from a specific payroll tax. SSI is designed as a safety net for people who have little or no income and resources, regardless of their work history. The program is meant to ensure that basic needs are met for the most vulnerable members of society. The amount you receive from SSDI depends on your average lifetime earnings before your disability began. The Social Security Administration uses a formula to calculate your benefit, which is typically higher for those who earned more during their working years. There is no set payment amount. Everyone's benefit is different. Family members, such as spouses or children, may also be eligible for benefits based on your work record. SSI payments are set by the federal government and may be supplemented by your state. The maximum federal benefit amount is the same for everyone, but your actual payment may be reduced if you have other income or receive help with living expenses. SSI is designed to provide a basic level of support, so the payments are generally lower than SSDI. The goal is to help cover essentials like food, clothing, and shelter. Both SSDI and SSI require you to have a qualifying disability, but the definition is the same for both programs. The Social Security Administration defines disability as a condition that prevents you from working and is expected to last at least 1 year or result in death. Medical evidence is required, and your condition must be severe enough to keep you from doing any substantial work. A major difference between SSDI and SSI is the role of work history. SSDI requires you to have worked and paid Social Security taxes for a certain number of years. SSI, however, does not consider your work history at all. This means that even if you've never worked, you could still qualify for SSI if you meet the income and resource requirement. SSI has strict limits on the resources you can own and still qualify. Resources include things like cash, bank accounts, stocks, and property other than your primary home. If your resources exceed the limit set by the Social Security Administration, you won't be eligible for SSI. These limits are in place to ensure that SSI only goes to those who truly need it. Unlike SSI, SSDI does not have resource limits. You can own property, have savings, and still receive SSDI benefits as long as you meet the medical and work requirements. This is because SSDI is based on your work history and contributions, not your current financial situation. The focus is on your disability and your past work, not your assets. SSI also has strict income limits. Any income you receive, whether from work, gifts, or other benefits, can reduce your SSI payment or make you ineligible. The Social Security Administration counts most types of income, but there are some exceptions. The goal is to ensure that SSI goes to those with the greatest financial need. For SSDI, there are no income limits from unearned sources like investments or gifts. However, if you are able to work and earn more than a certain amount each month, known as Substantial Gainful Activity, SGA, you may lose your SSDI benefits. The SGA limit changes each year and is different for blind and non-blind individuals. This rule ensures that SSDI supports those who cannot work at a substantial level. People who qualify for SSDI are eligible for Medicare after a waiting period of 24 months. Medicare is a federal health insurance program that helps cover medical expenses. This is a major benefit of SSDI, as it provides access to healthcare for people who may not be able to get insurance otherwise. SSI recipients usually qualify for Medicaid, a state and federal program that provides health coverage for people with low income. Medicaid eligibility is automatic in most states for those who receive SSI. This ensures that SSI recipients have access to essential medical care, even if they have little or no income. Applying for SSDI or SSI involves submitting an application to the Social Security Administration. You'll need to provide detailed information about your medical condition, work history, income, and resources. The process can be lengthy and may require medical records, doctor's statements, and sometimes interviews. It's important to be thorough and accurate to avoid delays or denials. After you apply, it can take several months to receive a decision. The Social Security Administration reviews your application, checks your medical records, and may request additional information. Some cases are approved quickly, but many require appeals or further review. Patience is important, as the process can be slow. If your application is denied, you have the right to appeal. The appeals process includes several steps, such as reconsideration, a hearing before an administrative law judge, and possibly further review. Many applicants are initially denied, but succeed on appeal, so don't give up if you're turned down the first time. If you're approved for SSDI, you may receive back pay for the months you were disabled, but waiting for approval. This back pay is calculated from the date you became disabled, minus a 5-month waiting period. It can be a significant amount, especially if your case took a long time to process. SSI back pay is also available, but it's calculated differently. You may receive payments for the months between your application date and your approval date. There's no 5-month waiting period for SSI, so you could receive back pay for the entire time you were eligible, but waiting for a decision. One unique feature of SSDI is that certain family members may also qualify for benefits based on your work record. This can include your spouse, children, or even a divorced spouse in some cases. These additional benefits can help support your family while you're unable to work. SSI does not provide benefits to family members. The payments are only for the individual who qualifies based on age, blindness, or disability and financial need. If other family members need support, they must apply separately and meet the eligibility requirements on their own. Both SSDI and SSI have citizenship or legal residency requirements. Generally, you must be a U.S. citizen or meet specific non-citizen criteria to qualify. The rules are strict, and documentation is required to prove your status. This ensures that benefits go to those legally eligible. Your living situation can affect your SSI payment. For example, if someone else pays for your food or shelter, your SSI benefit may be reduced. The Social Security Administration considers these factors to ensure that SSI is distributed fairly and only to those with true financial need. For SSDI, your living arrangements do not affect your benefit amount. Whether you live alone, with family, or in a care facility, your SSDI payment is based solely on your work history and disability status. This makes SSDI more predictable for recipients. Children with disabilities may qualify for SSI if their family has limited income and resources. The Social Security Administration considers the parent's income and assets when determining eligibility. SSI can help families cover the extra costs associated with caring for a disabled child. Children may also receive SSDI benefits if a parent is disabled, retired, or deceased, and has a sufficient work record. These benefits are called auxiliary or survivor benefits and can provide important financial support for families facing hardship. Some states add extra money to the federal SSI payment, known as a state supplement. The amount and rules vary by state, so your total SSI benefit could be higher if you live in a state that provides this additional support. It's important to check your state's rules to see what's available. Receiving SSDI may affect your eligibility for other government benefits, such as unemployment or workers' compensation. It's important to report all income and benefits to the Social Security Administration to avoid overpayments or penalties. Each program has its own rules about how SSDI interacts with other support. SSI recipients must also report any other benefits or income they receive. Most other benefits, such as food stamps or housing assistance, do not reduce your SSI payment, but some types of income can. The Social Security Administration reviews your case regularly to ensure you still qualify. Both SSDI and SSI require periodic reviews to confirm that you still meet the disability and other eligibility requirements. The Social Security Administration may request updated medical records or financial information. If your condition improves or your financial situation changes, your benefits could be reduced or stopped. If you're able to return to work, SSDI offers special rules called work incentives. These allow you to try working without immediately losing your benefits. For example, the trial work period lets you test your ability to work for up to 9 months while still receiving SSDI payments. This helps people transition back to employment safely. SSI also has work incentives, but they work differently. Some of your earnings are not counted when calculating your SSI payment, so you can work and still receive some benefits. The goal is to encourage SSI recipients to work if they're able without losing all their support right away. SSDI benefits may be taxable if you have other income in addition to your disability payments. The amount of tax you owe depends on your total income and filing status. Many people do not pay taxes on SSDI, but it's important to check with a tax professional to be sure. SSI payments are not taxable. You do not have to pay federal income tax on SSI benefits, regardless of your other income. This makes SSI a straightforward source of support for those who qualify. SSDI benefits continue as long as you remain disabled and unable to work. If your condition improves and you can return to substantial work, your benefits may stop. The Social Security Administration reviews your case periodically to determine if you still qualify. SSI benefits continue as long as you meet the disability and financial requirements. If your income or resources increase, or your medical condition improves, your SSI payments may be reduced or stopped. Regular reviews help ensure that only eligible individuals receive SSI. Let's quickly recap the main differences between SSDI and SSI. SSDI is based on your work history and contributions to Social Security, while SSI is based on financial need. SSDI has no resource limits, but SSI does. SSDI payments are based on your past earnings, while SSI payments are set by the government. Both require a qualifying disability, but the eligibility rules are very different. Choosing between SSDI and SSI depends on your work, history, income, and resources. If you've worked and paid Social Security taxes, SSDI may be available. If you have little or no income and resources, SSI could be the right choice. Some people may even qualify for both programs. It's important to review your situation and consult with a professional if you're unsure. You can apply for SSDI or SSI online, by phone, or in person at your local Social Security office. Gather all necessary documents, such as medical records, proof of income, and identification. Before you start, the Social Security Administration's website has detailed instructions and resources to help you through the process. There are many myths about SSDI and SSI. For example, some believe you can't work at all if you receive benefits, or that everyone gets the same amount. In reality, both programs have work incentives, and payment amounts vary. Understanding the facts can help you make the best decisions for your situation. If you need help applying or understanding your options, there are many resources available. Social Security offices, legal aid organizations, and disability advocates can provide guidance. Don't hesitate to reach out for assistance if you're feeling overwhelmed or confused by the process. To wrap up, SSDI and SSI are both vital programs that support people with disabilities, but they have different rules and serve different groups. SSDI is for those who have worked and paid into Social Security, while SSI is for those with limited income and resources. Understanding the differences can help you or your loved ones get the support you need. Thanks for watching, and remember, knowledge is power when it comes to your benefits.